Hello, everyone. Very excited to be here discussing high-performance trading infrastructure. My name is Matthew Potts. I'm a senior liquid research analyst and trader at CoinFund. Been trading in traditional and crypto markets for a little over 15 years now, so this is a topic that's very near and dear to my heart. So very excited to have this panel up here. If you guys would want to introduce yourselves quickly, then we can kick it off.
Yeah, sure. Hey guys, BJ here. I'm the CEO of Eclipse Labs. Eclipse, in a nutshell, is an SVM ETH L2.
GM everyone. My name is Jay, and I'm a co-founder over at EthCC Labs. And at EthCC, we're building the first parallelized EVM.
I'm Liz. I head partnerships at Magic Eden, which is the #1 NFT marketplace and the most interoperable blockchain wallet.
Mark from the Peace Data Association, Pith Network, Blockchain Oracle. You'll be able to look back at the keynote I just gave, I guess, for more details.
Awesome. So each of your projects fits differently into the trading stack. So could you talk about what your projects are bringing to the table and how you support cross-chain expansion and interoperability? Want to hit it off?
Sure, yeah. So for Eclipse, the vision that we always had was to be the highest TPS L2 on Ethereum. And Solana, to its credit, has been able to really support an order of magnitude higher TPS than traditional ETH L2s have from day one. Right? If you go back and look at a lot of the app building that's been happening on Solana, you had multiple central limit order books and high performance DeFi apps that were coexisting at once. And you didn't have to worry about this kind of noisy neighbor or hotspot problem that's driven a lot of high performance apps to do app chains or app specific rollups. And so our goal was to build a single L2 that could support the needs of 99.9% of dApps out there. And we felt we could do that by taking the SVM, which has native parallelization and the ability to support extremely high TPS, and settling to Ethereum so that you get the benefit of tapping into Ethereum users and assets. And then long-term, we'll lean into hardware acceleration to really drive that TPS much higher.
Yeah, over at EthCC, we have just one core thesis, which is that the EVM is here to stay. I'm guessing you might disagree with that. But yeah, like fundamentally, we think that everything that is happening in crypto right now, like in terms of developer activity, for example, a massive majority of it is tied to the Ethereum virtual machine. And there's significant limitations to what the EVM offers right now. Like if you look at Ethereum L1, if you look at anything that is using Ethereum for data availability, so like any rollup or L2 built on top of Ethereum, they fundamentally just cannot handle high performance. So this manifests itself with low throughput, high gas fees, and a much more restrictive design space for developers. And if you're trying to build any kind of exchange for, let's say you're trying to build a central limit order book, there's a lot of different problems that arise, which is why you haven't really seen any kind of cloud-based architecture take off on Ethereum L1. And we think that if you're able to optimize the Ethereum virtual machine, you're going to be unlocking a massive new design space for developers. And I mean, fundamentally, one of the most important things that's happening on chain right now is trading. So if you improve performance for the EVM, you will be able to support trading in a much more effective manner.
Yeah, I love that take. At Magic Eden, we've always believed in a cross-chain future and the belief that the entire ecosystem, whether it's NFTs, DeFi, oracles, it's all going to be interoperable with different chains versus just interoperable with its own chain. And I love this panel because everyone really is working on so many different interoperable products and apps. And something that we're doing, and we work with almost everyone up here, I think, if not everyone, is just using our wallet to make it so much more simple. And through that, you can swap from chain to chain, whether it's Bitcoin, Base, Sol, some new chains coming soon, but just really making it so easy from the bottom up is the biggest struggle for so many people. Someone gets Bitcoin and then they don't know how to get to Solana. They have to go get a VPN. They have to use 3 different apps. They have to Google for 20 minutes to figure it out. And the reason why we've created this wallet and made it so seamless is because we struggled with it as well. Even our founders that came from Uber and FTX and DYDX, they were struggling with it, and they've been in crypto for 10 years. And so someone coming into crypto that just knows what Bitcoin and ETH is, they have no idea how to get to Solana. They have no idea how to get to Say. And we just want to make that so much simpler.
I think on my end, on the high performance trading infrastructure, I doubt we're actually seeing the chain or the tech that will enable it. And by high performance, I think very much like Wall Street type of things, like it's speed of light. And I doubt anywhere right now you can get speed of light on chain, or at least on a decentralized chain. So almost my hot take would be the highest performance trading infra will be a permissioned centralized chain. Whether it's SIBO, NYSE that creates it, we'll see, or some other country. But to the on-chain part, I mean, and Pith is available on Eclipse and Say. I think it's one of the two best infra out there in production. I mean, testnet for Eclipse, whereby like the Say gas cost is pretty much zero and insanely fast. UX of SVM is great. So I'll call it the retail high performance trading infra. Best place to do it is Say and Eclipse today.
Yeah, I think that's a great point. I mean, when we're talking about high performance trading infrastructure, high performance can be very relative, right? So would be interested to hear what you guys find to be the core components of a high performance trading infrastructure.
Yeah, so for me, there's of course the infra piece itself, which we've been talking a bit about already, right? And I think having multiple options is great, and developer tooling, depending on the developer audience, right? So if it's EVM, Solidity, for SVM, Rust. So that's kind of table stakes. I think beyond that, to really enable a great kind of end user trading experience, you need extremely institutional grade and reliable Oracle infrastructure. That's where Pith and other players in the space come in. I think the other key piece is wallets, right? So Liz had mentioned a bit about that, but I think having really great wallet UX and wallet UX that also makes it easy to go cross-chain via the bridges and to access multiple chains is going to be super important, right? Especially as we kind of enter this sort of Cambrian explosion of infrastructure. So I think that supporting infrastructure is very key as well.
Yeah, so from a purely technical side, I think that there's a couple of different things that come to mind. One is just pure performance, and the second is risk minimization. From a pure performance standpoint, like if you want to, let's say, support a central limit order book on chain, you first of all need really cheap gas fees because there's going to be a lot of updates that are happening. There's going to be a lot of orders that are being placed, a lot of orders that are being canceled, orders that are being updated as well. And as a result of that, like you definitely need gas fees to be as close to zero as possible. Otherwise, it's just not really sustainable if you have to pay $10, $20 for each update that you're making. So I think gas fees, and associated with that is high throughput. Like just given the volume of activity that you'll need to be supporting with something like a central limit order book, there's no way around having just much higher magnitudes of throughput than what you see on like Ethereum L1 for now. With that being said, I think that there's another category of things that like sophisticated market participants will care about, which I'm just kind of broadly saying risk minimization. And the way that I think about this is sophisticated market participants, they want to be doing things in a way that's as deterministic as possible. So if they do something that has a chance of them losing money, then they're going to be accounting for that by offering a wider spread to users, which will be resulting in just worse trading experience for users. So examples over here would be reorgs. If you have a chain that does not have instant finality, so if you have a chain where there can be a reorg that is possible, where like a trade gets in theory finalized or confirmed, but then afterwards it's not part of the fork that's actually picked by a majority of the validator set, then as a market maker, let's say that, for example, you buy a SOL and then you hedge it off chain on Binance by opening, let's say, a short position. In that case, if like your long is just disappears because it was on a fork that didn't end up getting approved, then you're kind of stuck with just a short position and you're like eating all the exposure tied to that. That'd be like one example of something that you don't want to have. So that's why instant finality, I think, is pretty critical for trading infrastructure. Another thing that comes to mind is having guarantees that any cancellations that you're submitting will actually go through, or at a higher level, just confirmation that any trades that you're submitting will not be censored by people that are like block producers. And I think this is kind of an unsolved problem right now with a decentralized validator set. Like if you have some sophisticated party that is the block producer, they always have incentive to censor certain transactions. Let's say that there's an order cancellation that I'm trying to put through because the price of SOL changed drastically. As a block producer, I have incentive to censor that transaction and then put in my own order to take advantage of whatever that position is and then basically make money from that, right? So I think that that's another thing that you need to kind of help solve. And I think right now that's kind of an unsolved problem. So you need to figure out how to solve those in order to start getting like just from a technical side more adoption.
Yeah, definitely echo the sentiment of Jay, just, making it easy. And that's kind of what we're talking about, right? Before we can get high performance, we just need to get performance and just basic trading infrastructure. And that's where we're really lacking in the entire ecosystem, and especially cross-chain, like I mentioned before, with our wallet, obviously making it super simple to swap between different chains, but really just like having that onboarding moment with the MoonPay where you can just enter your debit card, credit card information and get crypto in minutes. And I think the opposite side of that is like off-ramping. We talk a lot about what to do on chain and how to get on chain, but how to get off chain, who's building for off chain, so much easier. I had a conversation earlier, and there's a third-party website where you can book flights and hotels through crypto, but who's doing that for mass adoption? Who's saying that this is way easier, way safer, and verified on chain versus just going to Expedia or hotels.com? And I think just having more infrastructure in general that makes sense, that has these real-world applications, makes the entire infrastructure so much easier to understand. And through understanding and education of the entire blockchain and all of the technology we have to offer, people will continue to build and they'll continue to reiterate different concepts. If we were having this panel a year ago, it'd be a completely different mindset and it'd be a completely different conversation, because the rate in which our community builds and develops is so much faster than anything in the entire Web2 space. So I think a lot of the high performance, I don't even know what the question was at this point, but I think a lot of the high performance issues that we're seeing are just about onboarding and offboarding, off-ramping. And just to kind of bring it back to the main point and what Jay and the other panelists were saying is, we just need to be there. We need to have trading. We need to make it interoperable. We need to make it easy to understand before we get into the nitty-gritty of it.
I won't have much to add here, but like bridging also, like we start having so many chains. A year ago, it takes half an hour. Now you have solution like dbridge, 5 seconds. You go from one chain to another. You can manage position. So we're still figuring out a lot of stuff. Like one thing, Elixir, for example, like this off-chain order book, we still haven't found like the perfect recipe. So it's just great to still have this either fully on-chain, use your Oracle on-chain, like Oracle-based per liquidity provider, GMX, SNX style, but the other guys, like whether Hyperliquid or through Elixir, I think we just more time, more testing, and like I'm a very much big believer in empirical data. It's all good on papers, but end of the day, if there is no one on the best tech, who cares?
Yeah, I think that makes a lot of sense. I mean, for us at CoinFund, I'll say we try to trade on DeFi as much as we can. A lot of times that's not possible, though, right? And there's a number of problems or reasons why we can't trade on DeFi. So I guess I'd be interested to hear like your views, the panel's views on what you think the biggest problem for cross-chain and interoperability is and how you're trying to solve that.
Yeah, so I think bridging, again, here's, one of the biggest gating factors. I think now we're starting to see infrastructure that definitely can support the kind of scale that's needed for, say, a central limit order book, like a really good cloud trading experience. But of course, like having it's not just kind of that underlying infra, but actually having apps being built that make sense for specific trading audiences, right? For example, like the trading need that you guys have may be very different from, say, a sophisticated kind of pro trader that's shitposting on Twitter, right? Mm-hmm. And like maybe a lot of that can be solved by having these different kind of interfaces that all tap into kind of the same liquidity network, right? But I think just being more cognizant of these design considerations kind of higher up the stack, and making sure that we're helping enable developers to build these super thoughtful app experiences that take advantage of the capabilities of infra, right? Because infra is like now reaching this point where it's, I think it definitely surpasses like it, or shortly will surpass like the needs of what current apps out there have, right? But then you have all the spare capacity. And I think we'll start to see developers come in and really build things to take advantage of that. And that's something I'm super excited about. But again, I think just being super thoughtful all the way up the stack and thinking about the bridging aspect as well is super key, right? When you have dozens of L2s and L1s that are all at this scale, like the bridging and the wallet UX becomes super important too.
So I think there's two reasons why you haven't really seen examples of like, let's say, an interoperable DEX that has become super mainstream. I think the first is just there's not that much like product innovation happening just across crypto more broadly. And I think that's like, if you have something that's interesting, people will go through whatever points of friction they have to in order to make use of it. So I think just lack of product innovation is like one reason we haven't seen that. From more of a technical standpoint though, I think the thing that's tough about interoperability is it's complex. And simple systems are typically the ones that end up winning out. Like, I mean, from both the developer standpoint and a user standpoint, the more points of friction there are and the more sources of complexity that can lead to issues in terms of onboarding or issues in terms of liveness or developer experience over here, they all serve to detract from having interoperability actually take off. So I think until that becomes simpler, it's going to be tough to have a true interoperable future. That's why I think the way that things will work is first you'll have examples of, rather than having like interoperable systems with high throughput, you'll have like just monolithic structures with high throughput. And once you're able to get that kind of performance on a monolithic chain, that's when it'll start making more sense to have this type of performance happen across some kind of like multi-chain type of infrastructure. So I do think focusing on single chain performance is going to be the important first step.
Yeah, definitely echo the sentiment. I think going off of that, there's a lot of different chains in the world. There's hundreds of different chains, L2s, L3s, L4s, L's 100 at this point. And it's just, for dApps and products, like everyone up here, it's like, where do you go? Where do you build? Where do you place a bet? This takes dev resources, BD, marketing, tech. It takes everything. And, you don't want to make wrong bets. You don't want to spend a ton of time building on a chain and not having any users or revenue. At the end of the day, we're all businesses. Users and revenue is important for sustainability of any of the businesses, to pay employees, keep the lights on, keep the data pretending, all of this kind of stuff. So if, building on a different chain isn't a good idea in the beginning, they don't have the users or revenue. In 6 months, it might be. Right now, there's a lot of news going on about Blast. It had a ton of users. Now it doesn't have as many. Opposite on Ton, there weren't a lot of users on Ton like 10 weeks ago, and now it's the number one chain for a bunch of different things. So it really is just about placing your bets and your gambles right. And I think just because it takes so many dev resources and each chain is so different, even if it's an EVM, even if it's an L2, it still has its niche, it still has its different properties, and that requires new dev resources and devs to learn how to build on all these different chains and L2s. So I think like it really is a fundamental problem of just where do you build and which chains are kind of worth it and which chains need different needs. Some chains are great for NFTs, some are great for DeFi, some are great for X, Y, and Z. And is it something where you build the same products on every single chain as a NFT marketplace? Should we add support for 10 chains, even if one of them has 100 million a month in revenue and the other has $5 in revenue in a month? Or do we just do certain things on different chains? And that's kind of what we're doing right now. Is like each chain we're adding support for, they have different needs. On ETH, you have Yuga Labs, you want to see your ape, your bored, your mutant, your dog, your ape coin. On Solana, you want to lucky buy, you want to spin the wheel, you want to go try and get an NFT. On Solana, there's 10, 20 different standards, and those all take dev resources, and it's such a niche object to add. And within each of those standards, there's also subsets. There's different animations, there's different media types, there's different metadata types. And that goes the same for every single product and every single part of our marketplace. And the same is true for our wallet as well. Every single wallet needs all of these different steps. I'm sure oracles, I'm sure chains, they all need these very finite and very minute steps. And it just really does come down to what makes sense. And for a lot of people and a lot of companies, building on every chain is very hard, and finding devs that are willing to learn or know about these different chains is also very hard.
Yeah, very much agree with you. Like cross-chain compatibility, while it sounds amazing and we may reach this level at some point, as Jay mentioned, it's insanely risky. Let's imagine I want to trade long Bitcoin, and actually the best trade would be getting my order split on Arbitrum per protocol A, Optimism per protocol Z. What happens if Arbitrum goes down for 1 hour when I want to exit my position? So it introduces insanely big risks that most users won't even understand or know about it. And end of day, sadly, crypto is still, I think, very tribalistic, whereby And overall, empirically, I think we've seen successful protocol have been like stuck on one chain for the longest time, and at the end maybe expand. Like for example, GMX and Arbitrum, they've been killing it. They could have expanded to 5 other EVMs. They decided it wasn't worth it, and I think they're right. So and especially with all these airdrop narratives now. Let's say I want to trade on this app that's both on Blast and Optimism. Okay, maybe my best trade is on Optimism, but if I just do a trade on the Blast, I can get an airdrop. So I'm not even sure users wanted this cross-chain compatibility already. And yeah, I think tech is also a bit still early.
Yeah, I think you bring up a lot of good points there that the users may not want cross-chain interoperability for all apps. I think as the space grows, you'll see performant chains for specific use cases, right? So I guess given that, I mean, how do you guys see the space evolving when it comes to interoperability for platforms and apps?
Yeah, so Eclipse specifically we're focused on this idea of like sync interoperability, right? So we want to be an L2 that can really enable most apps to come in and build on this one general purpose L2, right? And we're aiming for a TPS that can support the needs of most apps out there, right? So in some ways that even though we're using pieces of different ecosystems, right? We have the Solana VM and settling to Ethereum and Celestia for DA. Our goal is to build something that can enable the TPS that any developer out there needs, right? And so the benefits of interoperability really come in the Eclipse ecosystem from being a part of this broader network of apps that are sharing this single general purpose L2 and being able to take advantage of this extremely high TPS, MEV recapture that goes back to apps. So these are things that we're focusing a lot on. And we can do that because the SVM can rely on a more centralized sequencer set that can then inherit hardware improvements. And so we're going to lean a lot more into hardware acceleration over time, right? And really just aim for that extremely high TPS. So I think that's kind of our general approach to interoperability, right? Is really focus on this kind of app layer piece. But that being said, we do want to support a variety of third-party bridges out there. We're very focused on ensuring that the wallet experiences across the ecosystem enable seamless bridging of assets across different networks, because the reality is users will continue to use multiple networks and want to keep doing that. But I definitely also agree with what Mark was saying earlier, which is that from an app builder perspective, it does make sense to concentrate on one chain or one network early on. And so I think these dynamics will just continue to both be at play here. And I think solving for both of those at the same time is important too.
Yeah. In terms of what comes next for Interop, I think one thing that is very clear is that high performance is the future. Like parallelized chains of different kinds are a no-brainer, whether that's Eclipse, whether that's chains. I mean, there's chains right now that are forking, say, to build parallelized EVM L2s, whether that's like move-based L2s. So I think that is a no-brainer. And I think over the next year, we're going to start seeing essentially the commoditization of 10K TPS. The question then, after you achieve that kind of performance, then it's how do you actually enable the interoperability and whether that's really even worth it? So I think we're going to start seeing a lot more focus on having this interoperability. I personally am a little bit more bearish on that for the reasons I was saying before around like the complexity that introduces. Like, for example, previously, Mark, you were talking about like needing to like, let's say something happens on 2 different chains. What if one of these chains has a liveness issue and then that doesn't go through? Like there's a lot of edge cases that you need to account for that makes it much more difficult. So I'm not that optimistic in the near term that'll take off, but I think in the longer term, that would be one of the issues that would need to be solved.
Yeah, I think that just going back to kind of what we were saying earlier and what both of those guys touched on is, the bridging. It's really hard to get between different chains. And then for users, like, do users even want to go to different chains, as Mark was saying? And companies just need to take bets on that. And sometimes they're right, sometimes they're wrong. We made a bet on Ethereum 2 years ago, and no one wanted us to go to Ethereum. We had no market share. We went back to Ethereum this year, and, we had a lot of users. People were super excited. And it is kind of just, is the market ready for it? And I think it's a really good time to explore interoperability. People are exploring different chains. People want to try different things. things. They want to, degen. They want to create longs. They want to do shorts. They want to trade NFTs. They just want to see what's out there. They want to go to Tom. They want to play a clicker game and, level up their banana. But, it really does just go back to bridging. And the hope in the future is that, bridging is just like a click of a button, or even if it's not, you buy a Say NFT, you can just pay in the background with Solana, and they have no idea there's even a bridge, and it just happens in seconds or in minutes. So yeah, I guess the short-winded approach is just, our bridging needs to get better in general. And it really does go back to the, tech needs. Having every chain is very complicated and very hard. So, and then of course, do users even want this?
I think we're going to see a lot of like protocol app chain first design coming. I think V4 is a bit this idea of you kind of have an outpost that is, let's say, the accounting. It could be your own chain, it could be on a public chain. And then after, it's like managing this 25 deployments on all these EVMs, layer 1, layer 2s, etc. So I think more and more heading this way. And same also for the UX. Whereby you don't, and again, mention Infinex here, where you kind of abstract this on-chain part. Of course, you deposit using a Solana, Ethereum, Optimism, whatever address. But then after, they abstract away all the, no pop-up, no password, no seed phrase, all in with passkeys. So I would imagine just for protocols to work, to be used, they have to be more UX user-focused, and then just abstract this away from, and even myself, I do DeFi every day. I mean, I click 100 times the MetaMask or the Rabbit thing, it's enough.
Yeah, I think, everyone here is probably crypto native, and there's apps or chains that can be difficult for us to use, right? So how do we expect to bring in Web2 or retail when even for us, the user experience is where it needs to be? So I guess that leads me to my next question. Maybe the $1 million question is, what needs to happen for truly decentralized trading to compete with centralized exchanges?
Yeah, so I think we're on that track now where with each successive generation of trading apps, the experience gets better, right? And I think with the likes of DYDX and Hyperliquid, we're starting to see that happen, right? I think DYDX has probably been a bit more catered to institutional traders in terms of the user base, and Hyperliquid a little more retail centric now, especially just pre-token launch. And the user experiences of these apps are great. They're both Cosmos app chains. And the reality is, I think bootstrapping a user base as a Cosmos app chain is, you have to either have that existing user base and distribution out of the box that you can migrate over like a DYDX, or bootstrap that through the virality, great product experience and points the way that Hyperliquid has. So I think making it easier for devs to build day one really good cloud experiences, right? That don't necessarily have to be an app chain, right? I think the most Hyperliquid is probably an exception in terms of being able to bootstrap that. But, in a lot of cases, you've also seen more established players who've come in and eventually migrated over to one, right? Like Aave and DYDX. So I think just reducing that barrier to entry and making it really easy to build best-in-class applications with a good DevX, a good UX, is super important. So I think we're heading there, but continuing to enable that and provide the right developer tooling across each of these infra ecosystems as well.
Yeah, I generally agree with everything you said. I think it's quite tough to get something that is done in a decentralized way to get as much adoption as something that's done in a centralized way, because centralized systems are just easier. So I think there's probably 3 things that come to mind that really need to happen before you start seeing it DEX with the kind of activity that's happening on a centralized exchange. The first is there probably needs to be some economic reason for people to come over. So I think there needs to be some kind of structure, sort of incentive structures that are set in place that incentivizes people to really want to come on. Because if you have the same experience or the same outcomes between a centralized exchange and a DEX, people will choose the simpler system basically all the time. So I think that's one part of it. The second part of it is the onboarding experience needs to improve a lot to become more accessible for normal people. And the third is the performance of these underlying systems needs to be improved as well.
Yeah, definitely echo that. I think, just taking it a step back and kind of what Jay was saying is like, how do you get into crypto? For us, it's simple. For someone walking on the street, they have no idea. They're like, oh, I've heard of Coinbase or crypto.com. I've seen it at an NBA game or something like that. And that's like the first step. They use Robinhood, they use Coinbase, something like that. And that's, kind of the end of their journey for the most part. As Matt was saying, like it's hard for us to use some of these applications and bridge between chains. So imagine someone that barely knows how to use Coinbase is just very, very much struggling. So I think just like moving in the right direction as a community is something we're doing right now. But just making everything easier and simpler and easier to understand. Even some of the things discussed up here, a lot of people, even crypto natives, don't understand a lot of it. They don't know what an oracle is. They don't know what high performance trading is. And just dropping down those walls, dropping the barriers, making it easy to understand is not really high performance trading, but it is the next step in the journey for us to get to those next billion users.
And I agree with everything said here, and I'll just expand on I think what we need is also more stress testing of everything. And so what we saw is the points meta, of course, C-billing, airdrop farming, but it's relatable. Like you have Starbucks, and I don't know about it, but you must have a Starbucks membership account, you have points, etc. So offering relatable experience is, I think, how you onboard more people and actually stress test everything. And just need a bit of time. Tech will get better, liquidity will get thicker. It's just here and there to just still be able to attract and talk to people.
Awesome. Great. Well, we're at time. So thank you all, and thank you. Great discussion.